Hey guys, welcome back. So today is Friday, and what we decided to do is do another segment called Freestyle Friday, where on top of our educational video per week, we wanted to upload a short segment every Friday talking about various different topics that may or may not be related to finance. And in general, it's just something interesting that I thought we should share to everyone. So for this week's Freestyle Friday, I wanted to talk about what happened 2 days ago in the US and how that decision may be a very good thing for us when it comes to Canadian real estate. So back in March when COVID-19 hit US, the market collapsed. The US government immediately slashed their interest rate to 0%. Plus, they announced they're going to inject about $700 billion into the market. 2 days ago on Wednesday, the US government actually announced they would keep the interest rate at 0%. Plus, they're going to inject another $4 trillion in the coming months. But how does that have anything to do with the Canadian side of investing, especially real estate? So this is just my personal opinion. Basically, long story short, what's going to happen is US currency is going to go way down in the near future. Plus, we're going to see a surge in price in Canadian real estate. Now, when I say the real estate it's going to go up, what I mean is more of a long-term trend. In the short term, we definitely are going to see a slump in the market. And I'm going to walk you through my thinking on this. There are four major keys to consider. Number one is back in March when the market crashed, everybody sold everything in the stock market to hold US dollars. This is usually very common whenever there is uncertainty in the market. Cash is always better in people's opinion, especially US cash. Because US cash is used everywhere in the world, it's a common denominator. And this was especially true during the COVID-19 crash, and everybody was very uncertain about what the world is going to be. So this is why you see actually gold price crash along with the stock market. During that time, people were panicking and people weren't really sure what the world was going to become. So even things like gold became very unattractive. They much rather hold cash than anything else. So result of number one is now people are holding on to a massive amount of cash. Key number two to consider is what I said before. The government is going to pump an additional $4 trillion into the market. So what that means is a lot of the big corporations are going to have a lot of cash on hand because the government is helping them out and giving them a lot of liquidity to work with, which means on top of people selling things and holding on the cash, the government is pumping additional amount into the market. So if before we only have a slight overflow of USD, then now we definitely have a massive overflow of US cash. Key number three is by keeping the interest rate at 0%, what that means is US bank saving accounts are no longer attractive to put your cash into because you will be earning close to nothing in the saving account. And people were already earning almost nothing before the crash anyway. After the slash in interest rate, you definitely won't be placing anything into your US account. And last key is a secondary effect of having 0% interest rate. What that means is lending power went way up for everyone, especially the rich people, because right now the cost of lending is very, very, very low. So for wealthy people who are looking to buy more asset during this time, they suddenly have a lot more options than before on how they can get their capital. So with the four keys combined, what does that mean? Basically, it means we have a lot of USD and we have nowhere to put it. You might say, well, you can buy back into the stock market because it's so cheap right now. Well, for an average investor, you have a limit on how much you're willing to put inside a stock market, especially given the crash was so recent. Many people are going to be very cautious when it comes to reinvesting in the stock market. They probably going to take a long time before they regain the confidence, but they do have to put the cash somewhere at the end of the day. So this is where the two best hedge for US currency is going to come in. One will be gold. It's because people now already calm down and they realize gold is still a very good and easy way to hedge their money, which is why we see the gold price recover immediately and went way higher than before. But the second asset class that will come in as soon as COVID-19 calms down will be real estates. Because similar to gold, real estate in a lot of people's eyes are completely different from stock market, and the solid is something they can see, they can touch, and they can also potentially collect rental income on top of that. Now, this is where Canadian real estate is going to benefit because at the end of the day, people not only want to hedge against the market by buying real estate, they also want to hedge against the currency in case US currency is going to drop. So what would they prefer is holding real estate in other countries where they're working with other currencies. And the best place for US investor to invest is actually Canada because we're right next to it, For a lot of people, it's very easy to manage, and worst case, they can easily hop on a plane and fly over and manage the property over there. On top of that, Vancouver and Toronto are known to be hotspots of immigrants and also investors, so there are already historically a huge demand in those places. And last year, Vancouver and Toronto just went through a market price slump, so for a lot of investors that were eyeing these markets, now it just becomes attractive for them to jump in and maybe buy it before the market recovers. And if we look at the trend of post 2008 financial crisis, Vancouver and Toronto actually went through the exact same trend where we had an initial dip in price, but we recovered super fast, and then we went way beyond and to a historical high. This is because hot money kept spilling over from other countries. Now, what's different from 2008 is right now there are something called foreign buyer tax installed for Vancouver and Toronto. This will deter some small investors, but from speaking to some big foreign investors, the 20% tax is really not a big deal for them. After adding the tax, it's still going to be a fraction of the price of what they need to spend in New York, London, Hong Kong, or Shanghai. So that's basically my quick take on what the future trend is going to be. Now, this by no means is a advice to go out and buy real estate right now. Now, as always, before you take any actions, make sure you consult with your own advisor on this. All right, with that being said, this is the end of our Freestyle Friday session. If you like the content I'm providing, make sure you hit the like and subscribe button below. I hope you found it interesting and I hope you learned something. This is Jackie Cook and I'll see you in the next video. Bye.